Good old-fashioned GBPUSD, man. We've been bearish for 3 weeks in a row. Before we sold off the prior week, we ran into the consequent encroachment on a high time frame bias. So if you was to go into a monthly time frame, this is the consequent encroachment off the fair value gap. It's been located from there to there. I did not place this over there just to keep the price, just to keep the charts nice and clean. As you can see, the consequent encroachment has been tagged for sell-off, and that was a manipulative run to take buy stops out on a macro time frame. So I do believe that if all the lows has been taken out, we could continue our run into 125944 and even further going into this bearish down close candle before the upwards move to the upside. This open at 125397. We do have an order block right there located at the highs is at 1.24986. But we're going to take things one step at a time, and my next point of interest on a weekly time frame would be 1.25944. Now, this week we obviously ran into an area, right? Let me just clean this up. We ran maybe 10% into this wick here. The consequent encroachment is probably over there. Never made it, which indicated the weakness of GBPUSD and also indicated the strength of dollar index. So if we were to see a capitulation down into 125 potentially, 125 to 125 hold, 1.25 hold, we could see the run in DXY that has already been projected up to 106, 186 on the intraday time frame, but on a macro time frame it will be 106, 600. I'm running on that buy stop liquidity pool right there. Alright, let's go into the daily time frame. And as you can see, it's the Friday that we've traded lower than the bearish order block. We tagged the highest displacement fair value gap. We've got the consequent encroachment, which we actually rejected. We've got the lows right there. Right? Going into the future, what we have right now is a imbalancing price, or should I say a fair value gap, because this candle took the lows and we left the gap in which price action could shoot to the upside, fill and reverse. And what we could target now would be this cluster of down close candles right there. Right? This candle spiked, took the lows out. The lows there. This candle took the lows out. There's no imbalances, so this would be my area of interest. Going into the future. So you could see something along the lines of this. And then this. That is ideally what I'd like to see, because we are usually, you do get some form of a rejection from the higher time frame, a raise. So short-term rejection, short-term retracement, and then a continued sell-off going into the lowest displacement of this fair value gap, bearing in mind that we've respected the consequent encroachment. So we need to break below these lows and target the next point of interest and target this fair value gap right there, which would also coincide with dollar moving up to 106, going into 106 and higher. I'm actually going to delete these. Going into the intraday time frame, I'd say that this supports my narrative. Let's stretch this out over there. Delete this. And look at all of these lows. All of these lows. I expect all of these lows to be taken. All of these lows, all the way up to this higher time frame premium array, which is a bearish order block, which has already been respected. So what we could see, right, going into the future is, because remember we have to use higher time frame bias with lower time frame narrative in order to understand where price action is most likely to go. So if it was a run up, we've got an area right there, which is outlined on the hourly time frame. From there, break, take these highs out, and I wouldn't like to see price run above this gap right there. So let's go back onto the hourly time frame, and if we're to shoot to the upside, I'd like to see something along the lines of this. Take all of these stops out and then continue lower. Not only that, that would also coincide with price action being in a premium, right? Setting up smart money traders to accumulate majority of their short positions to target discount lows, which would be all the way here. This is ideally what I'm looking out for. This would be the narrative that I'll be ideally looking out for.